Okay, I think we can, we'll get started and people can come in as they log in. So thank you for joining us today. I wanted to have this dialogue and this presentation because obviously it's been a really challenging year for, I think, everyone. And particularly, I think in New York, we've been harder hit than a lot of places. But it has definitely caused a lot of people to rethink kind of protecting their family and themselves and making sure that they have everything in place that they need. And if we've learned anything over the past year, it's that it's really hard to tell what tomorrow is going to bring. So we want to make sure that we have kind of what we need in place before we get to a point where it's really needed. So I'm just going to introduce ourselves. I'm Shannon McNulty. I think probably a lot of you are familiar with me already, but I'm an estate planning attorney in New York. We focus mostly on families with young children, international families, and what I call rock star women. So those are the people who are most of my clients, and that's where my experience is going to be drawing from. Our other participants today, I kind of wanted to gather a couple of people with expertise who could really speak to some of these issues. So I've called on some of my most trusted people who I refer to for insurance purposes. And Erin Ardleigh, she's the founder of Dynama Insurance. Dynama Insurance is an independent brokerage. They have an emphasis on education and transparency in terms of what exactly your life insurance looks like, how much it costs, what the fees are. And they have an expertise in life insurance, disability, and long-term care and group health insurance. They also have expertise in difficult to insure clients and cross-border planning, and they're great at doing insurance reviews and rescues if you have a policy that you're not sure if it makes sense for you anymore, or if there are things that maybe you can get a better policy, then she's great. And I definitely would call on her to do that. She would be helpful in terms of reviewing everything and letting you know if there's any way that you can improve what you already have. And you do that, Erin, correct me if I'm wrong, on a complimentary basis?
Correct.
Great. So I would definitely take advantage of that if you have any questions about your current policy. And obviously, if you feel like you need additional insurance. The other person who we have today is John Pugliese. I had to clarify that the pronunciation before our webinar. And John, he specializes in property and casualty insurance. And if you're not sure what that means, that's kind of like homeowners insurance, any insurance of collector's items, flood insurance, things like that. And the reason why I kind of pulled on these different areas and these different experts was because of some of the changes that have taken place over the past year. And this kind of gets to what our presentation is going to be, what we're going to focus on. So I'm going to talk a little bit about estate planning issues after COVID-19, how that's changed the estate planning landscape. But most of it is going to focus on insurance. And so we're going to get into life insurance. So, how COVID has changed life insurance, the life insurance marketplace, if you've had a COVID diagnosis, what that means, if there's anything that you need to be aware of. One of the things that has changed over this past year is that a lot of people have gotten second homes. So particularly if you're in New York, a lot of people have purchased homes outside of the city because it's been really challenging to kind of spend the time in this past year in the city. And then I think a lot of people have realized that maybe they want some more space or another place where they can go to kind of just have more space and more maybe nature and things like that, even though we all love the city. Finally, the other thing that has changed dramatically is that we are now more living our lives more online than ever before. So, in this presentation, of course, is one of those things. But a lot of times, we're now working from home. Everything almost that could possibly be done online is currently being done online. And that can present a lot of sort of security challenges. And it's something that we certainly have seen all over the place this year in terms of both people personally being the victims of identity theft or cyber crimes, and even at the national level, we've seen what havoc that can wreak. So this is sort of like a whole new area of insurance that it's good to be aware of, and I thought it was great to pull John in for that as well. So we're going to spend probably about 15 minutes going through some of these issues, kind of talking briefly, giving an overview, and then we're going to get into Q&A and into discussion. So if you have any questions, feel free to put them in the Q&A, and we will definitely be getting to the questions as soon as we kind of give a brief overview, but I just want to make sure we touch on all of the topics before we kind of dive further into more specifics. So in terms of estate planning, what I've seen with my clients and in the current landscape, we've definitely seen the importance of planning ahead. Last spring, we kind of had an influx of a mad rush, if you will, of people trying to get their wills done and wanting them tomorrow, and being in a situation where we couldn't even do them because we didn't have the authorization from the state to do remote notarizations or remote witnessing. And so we were really in a position where, people really needed their wills done. We couldn't even do it. We couldn't help them. So, and then even once we could, obviously we have this huge influx and it's taking more time. So one of the things that I think just is a really big lesson, all of this, is just making sure you plan ahead. So you don't want to be caught in a situation where you're desperate to get these important documents in place, and making sure that kind of like that's in place. If something happens and we have a pandemic or whatever, that's something you don't have to worry about, and that you've taken care of that already. Another thing that has come up, a lot of questions about healthcare proxies and living wills. Especially in the beginning of the pandemic, we've had a lot of people had to be put on respirators, or that was one of the standard treatments that they were doing for people who really needed it. And people who had living wills saying they didn't want to be on artificial respiration, that could have been a big problem for them. So they were really concerned about what does my living will say? Are they going to put me on a respirator if I need one? So we really want to take a careful look at what those documents say, what those healthcare documents say. I am always of the opinion that you should always leave the final decision to your healthcare agent. So somebody who can make a decision at that time, knowing all of the circumstances, so that you're not directing that you don't have artificial respiration if you don't know what the circumstances are going to be. You always want somebody who's a person, a living, breathing person, to be able to make that decision on the ground. So that's something you just want to be really careful of. For yourselves or for your parents, making sure, seeing what those documents say. The other really big issue that came up this year, and it's a continuing issue, is seeing what problems have come up in the context of relying on the courts. So when you have a will-based planning, when you have a will that leaves your assets to someone or leaves them to what we call a testamentary trust, all of that, assets have to go through probate. What we call probate is the court process that transfers your assets from yourself into the name of your heirs. That requires a court order to access those assets that you're leaving behind. And it's taking a really long time. And it's better now than it was a year ago, but we're still seeing backups. I mean, we're kind of telling people a year that it's probably going to take. So if your family would need the money more quickly, then you don't want to be relying on probate for that. So either you want to have those assets be left through a beneficiary designation, or through a revocable living trust, which avoids probate. It just makes it a lot simpler, a lot easier for your family. You're not relying on a court to have to authorize you to access those assets, your family members. So those are kind of just some of the overview of some of the estate planning things that I've run into and we've talked to clients about this year. And next is kind of going along with estate planning. Life insurance is always a big part of it. I'm always talking to my clients about the importance of having enough assets and having enough life insurance to make sure your loved ones and your family are taken care of. Because if you can have the best documents in the world, but if you have no assets to leave behind, then they're not really doing a whole lot of good. So Erin is going to kind of speak to the life insurance piece of it. So Erin, why don't you take over and share with us some of the tips of how life insurance has changed over the past year, and some of the tips for people, what they need to know and what they need to do.
Thanks, Shannon. So I'm Erin Ardleigh from Dynama Insurance. Thank you for having me. And let's start with the good news. The good news is that if you have existing life insurance, there is no carve out for a global pandemic. There's no exclusion for COVID. So if you were one of those people that Shannon mentioned that planned ahead, that got your plan in place, you're good, you're covered. So that's should provide some comfort for those of you that have insurance. However, if you have insurance, you're not totally off the hook. It is really important to review your insurance policies. We recommend that if you have a cash value policy, that's typically a whole life policy, a universal life policy, that you review that policy once a year or at least every other year. What you want to make sure is that this policy is performing the way you want it to. If you have an investment account, you probably review that account to see, is it going up or down? You need to review your life insurance policies as well. So you should work with the agent that sold you the policies if you have a good relationship. But if not, you could work with an independent brokerage like Dynama to help you to understand what you have and is it doing what it's supposed to do. Those things can change over time. It's really important not to just take that insurance policy, throw it in the file cabinet and forget about it. The other thing that's super important is estate plan coordination. So many of you bought insurance policies years ago. Estate taxes exemptions are changing. We have a new administration. There's a lot of talk about Biden making a lot of changes that affect taxes and estate planning. So now is a really good time to talk to your estate planning attorney, your financial planner, your accountant, your insurance broker, get all those people to have a conversation and make sure your plan makes sense from everyone's perspective. So engage your team. If you don't have a team, now is the right time to build one, because you don't want to have life insurance to just leave more tax, to have it taxed and leave more money to the government, right? You want to have it be something that's very tax efficient and that gives every cent to your family. So
if I could just chime in, Erin, on that, because it does come into play with estate planning, is that if you, right now, kind of some of the things that Erin's talking about is that the estate tax exemption currently is around $11 million, between $11 and $12 million. We're expecting that to go down to possibly even around $3.5 million, but more likely somewhere around $5 or $6 million. Your life insurance proceeds are part of your taxable estate. So, so if you have $1 million in assets and you have $4 million in life insurance, then that could end up being taxable. And so if if that's the situation, you want to hold the life insurance policy in an irrevocable trust. So that will take it out of your taxable estate. So it's really important. And I am telling clients a lot more to purchase their policies in an irrevocable trust, because we're not sure what that exemption is going to be like in the next couple of years.
So if you bought your policy and it was not in an irrevocable trust at the time you bought it, now would be a good time to revisit whether you need to make that change now. And as Shannon said before, if you wait until the last minute, the law says the exemption is changing at the end of the year and you wait till December, you may not find an attorney that's available to help you. So it's really important to start thinking through these things now. So let's talk a little bit about new insurance for those of you who might need to get some extra insurance. That certainly came up a lot during the pandemic. So I have a little pop quiz for you. Which of the following conditions would not affect your ability to get life insurance at the best rate? And you can just take a minute to read through and you can guess and see if you guess right. Very few people get this one right. So the only answer on this page that would not affect you with any company in getting the best rate is actually number 5. If you recovered from COVID at home, there's typically a 30-day wait period. The insurance companies want to see that you recovered, and then you can get insurance. The reason all these others are an issue is the insurance companies have become extremely concerned about any health issues that could put you at a greater risk for mortality with COVID. So diabetes is something that could lead to a worse case of COVID. They'll be more concerned about that. They will also be concerned about a weight gain because being heavier, having a higher BMI, is a higher risk for COVID. They will also be concerned if you have postponed routine colonoscopies, procedures during COVID. So if your doctor told you to do something and you haven't done it, that could be an issue. And then a couple of things that are frequently issues are if you've had a parent or a sibling pass away before the age of 60 or 65 with some companies. And if you are smoking or vaping, or even using marijuana in a state where it's legal, some companies treat that as smoking. And then this is the surprise on the list is plans to visit a resort in Cancun. Right now, some companies will not give you insurance if you have plane tickets to fly somewhere internationally that the insurance companies view as a risk. And right now, Mexico is one of those countries. So if you're thinking about insurance, it's extremely important to talk to an insurance broker before you book tickets, before you do a ton of extra medical visits, and kind of get a sense as to what is going to impact you and what might not. And a couple of quick tips here are just, you want to always keep in mind, with this stricter underwriting, this is really where the need for an independent broker comes in. If you go online and you just look at the least expensive company and apply, you're not going to have any idea if that company is going to penalize you for that trip to Mexico or those extra 10 pounds or that death of a parent, for example. So an independent broker is going to know out of 10, 15, 20 companies, which ones are going to be ideal for your personal situation. We've really tried to help clients right now understand it's not so much that prices are increasing in the insurance marketplace, but we are seeing the marketplace tighten. So the products that are the best, some of those are being taken away or scaled back. So it's still a great time to buy new insurance. There's still great prices, but we might start to see some changes more and more over the next year or two, with the insurance companies kind of scaling back some of their, excellent or least expensive products. The last thing for new insurance I think is really important to know is we now have virtual options. These are different from state to state. But in New York, we can sometimes get up to $5 million of insurance without an exam. So you don't have an excuse anymore. It's a really easy process now. Many companies let you do an online health interview and sometimes can issue a policy within a few days. So technology is our friend right now in the insurance industry, and it's making what has been sometimes a very lengthy process much more efficient. So for generally younger, healthier people, it's become easier to get insurance. Just going to touch on long-term care insurance. I'm guessing a lot of the people on this call might think they're too young, but 40 is really the new 50. So we're suggesting you consider long-term care in your plan. And if you've not looked into what a hybrid policy is that combines life and long-term care, that's something that you should certainly have an education on before making any decisions. And lastly, disability insurance. So disability insurance was something that caused a lot of questions and concerns during the pandemic because people either lost their jobs or switched jobs. A lot of times those group benefits that you have are not portable. So it's really important to read and have help understanding what you have through work and whether it's portable. If it's not portable, we often recommend something I call the back pocket policy, which is a small, inexpensive policy that accompanies what you have through work. But should you leave or lose your job and not have coverage, you can expand that policy that you have in your back pocket without having to go through any new medical underwriting. So it's a great fallback position. A time of crisis could make life easier. We also have virtual underwriting for disability. Again, no exams, super easy, just a phone call many times to get up to $10,000 per month of benefit. So again, if you're in the market, look at what you have. If you need more, it's actually easier than ever to get new policies. What we saw a lot is, people who really need to be looking at their insurance and asking questions are entrepreneurs and business owners. You need to protect your family as well as the business. What I like to call wealth builders, which are younger people making a lot of money, but still building, might still have a lot of debt, mortgages, college obligations, taking care of families. There's really a lot of need for insurance there to protect everyone while you build that wealth. And of course, expecting parents. I often joke that you should leave the hospital with a life insurance policy tucked in with the baby. Really, insurance and children go hand in hand. It's so important to have the right amount of coverage. So this has been a very quick presentation, but if you'd have questions, I'd be happy to give a free consultation and talk about these things with you in more detail at a much more leisurely pace. I'll turn it over to John.
Thanks, Erin. And again, thanks, Shannon, for having us. Again, my name is John Pugliese. I'm from Alliant Private Client Insurance. My entire business, entire focus is on property and casualty insurance needs for successful families and individuals across the country and even internationally when there's properties located elsewhere. So as you'll see on the screen, just real quickly, and I want to be cognizant of everybody's time and make sure we leave some time for questions. High-end homes, estates, collections of all types, automobiles of all types, whether that be your daily driver, whether it be a collector vehicle, yachts, watercraft, private aircraft. If you have domestic employees, especially in New York, there's specific needs and qualifications that are needed for workers' compensation coverage and disability coverage. You name it, if it's a personally owned asset, we can help. The biggest thing that we talk about, and I want to touch on it quickly, is your liability coverage. So that's a really large conversation that we can have around how do we properly protect you and all your assets in the event of a liability claim made against you. So just on a high level, again, anything personally owned, happy to help on the property casualty side. We'll move to the next slide. So similar to life insurance, but a little bit different here on the property casualty side. With that, we saw the pandemic create basically an uptick, and it really sped up some changes that we were already seeing in the marketplace for property casualty insurance. Some of that was driven by people started moving around. So as Shannon mentioned originally, people started buying second homes, especially out of New York and large cities. They were migrating to different locations. They were going to homes where they could get more land, where their kids could potentially spread out if they were working at or going to school from home. People are now working from home. With that, new exposures came into play, and we're going to touch on a couple of those quickly. But some of the big changes we saw as well is as a migration to warmer locations. So specifically Florida, I'll touch on. A lot of New Yorkers, a lot of us in the Northeast decided to buy property in Florida. Well, historically, Florida, if we think back about 5 years now, we've seen a lot of very active hurricane seasons in Florida. And with that, insurance companies have decided that, well, number one, rates are going through the roof in Florida because of the losses paid out from those claims, and capacity for those insurance companies is at an all-time low. So you add that in with people buying in these locations, we've got a bit of a perfect storm. So if you're thinking about buying a property in Florida, or you have family buying property in Florida, it definitely would behoove you to have a conversation with your broker ahead of time. The last thing we see, and we've seen it multiple times now, where people are buying properties that they fall in love with, and either they can't be insured or they're being insured with a subpar product for a premium that no one was expecting. So Florida's in a very tough spot from a property insurance standpoint. So I just can't dwell on that enough, that have those conversations ahead of time. Depending on the location and the year built of that home and a lot of different factors, Florida's a challenge. So keep that in mind. A couple other areas across the country as well. Again, California, Texas, a lot of these locations that people have decided to move to for whether it be tax reasons or just the weather in general. Those markets are in very challenging places for an insurance standpoint. So keep those in mind. Again, just have those conversations ahead of time so that there's no surprises after the fact. We'll move on to the next one. Real quick, when people bought new properties or whatever, or they decided maybe I'm going to stay put and I'm home now, so I'm going to do a renovation. Well, what that does is it opens up some exposures that people maybe weren't thinking about. So make sure you're vetting your contractors, make sure they have the proper insurance in place. Make sure you're talking to your broker ahead of time. If you're doing a renovation, your coverage is different when you're doing a renovation versus when you're just living your life. Insurance companies look at renovation as a significant exposure. You've got more people on the property. You've got the chance of loss goes through the roof. God forbid somebody leaves something behind, or in New York City, we see it all the time. Somebody leaves something, they disappear for a day, water leaks into 3 units below them. These are exposures. Well, with that, make sure we're talking to your broker ahead of time, have those conversations, adjust the policy accordingly. The last thing you want to do is put yourself in a position where an insurance company has the opportunity to deny a claim because you did not disclose that to them, or put you in a really tough situation going forward, even if they do cover the claim with eligibility once the actual renovation is complete. So keep that in mind. Again, DIY projects, I touch on it real quick here. Just, again, it opens up opportunity for significant loss that if it's not your expertise, just keep that in mind. Lawsuits do arise from work that's been done that obviously was not done professionally, and it's an exposure a lot of people don't think of. They've been home throughout the pandemic. They decided to do something on their own. It creates an exposure that they never even thought of. We'll jump to the next one.
There we go.
And we'll move quick, but this is a really important topic. And again, we mentioned our lives have now moved online. Look what we're doing today. It's cybercrime. We've seen it as a huge issue. And you turn on the news, you see insurance companies are in a very interesting spot when it comes to covering cyber and what's going on with the market. So that said, we've seen for years now, probably a decade plus, large businesses being targeted, and we're still seeing them targeted. Again, turn on the news and we'll see it. Along with that, now successful families and individuals are being targeted because it's very inexpensive for cyber criminals to attack us, to look at us as an opportunity to make a quick buck. And we need to make sure that we're protecting ourselves in the event of a financial loss experience from cybercrime. So what happened? Insurance carriers that specialize in the affluent market created a product in the last handful of years that now covers this. If you experience a financial loss due to some type of a cybercrime, whether it be a wire transfer where you were duped into wiring money incorrectly, we see that quite often at this point, whether it be a fraudulent unemployment claim made under your name, whether it be a cyber ransom that you're forced to pay or an extortion of some type, there is coverage for this. Every company is a little bit different, but there's 6 insurance companies that offer this in what we call the high net worth insurance marketplace. The coverage is extremely inexpensive to obtain, maybe a few $100s a year, and it's incredibly broad. So this is becoming a topic of conversation I'm having with every single one of my clients, prospective clients. The losses continue to go up. I've seen 4 in the last couple months, and honestly, the cyber criminals are well ahead of the insurance companies when it comes to what's being done. So I could not stress that enough to have that conversation. If you're already with one of these insurance carriers that offers the coverage, if you don't talk to your broker to specifically ask they add it, it's not being added to your policy. So keep that in mind. It's a quick phone call or an email saying, hey, I want to talk about this. Let's add this coverage. It's not just being rolled onto your renewal every year. So keep that in mind. Move on. And there are just a few examples of what's occurred, but most of them have been, like I said, wire transfers gone wrong. We've seen some extortions of money where people have been phishing into your email and monitoring what you've been doing for months on end, and then they take advantage once they see that you're making a purchase or something that's going on. So this is real. We're seeing it all the time. People now being at home. Again, maybe the security isn't as strong as it once was when we were in the office. So keep that in mind. Quick quiz, and again, I'll let everybody just read it real quickly. The answer as we go through is every single one of these could inadvertently expose you to a cybercrime. So even when we're not thinking about it, we are leaving our footprint. There is a chance that somebody's monitoring something that we didn't expect. We need to protect ourselves from a financial standpoint in terms of cyber. So this is something that's continuing to evolve. It's something that I'm staying on top of every day because the coverage is extremely broad right now. For some day, who knows if this will continue to last, but this is something that's going to become more and more of a significant problem. So it's something that our clients need to be aware of, and it's definitely a topic of conversation that's very, very high on everybody's mind. So that's the cyber piece. So I would just recommend everyone have a conversation. If you're not working with a broker, I'm happy to have a conversation with you. It's something that we're seeing, and it's not going away. So I just recommend getting out ahead of it, whether it be your property or whether it be cybercrime. Keep these two key items in mind as the marketplace continues to shift. Thank you.
Great. Well, thank you so much, John and Erin. And if anybody has questions, please put them in the Q&A or even in the chat if you want. And I have a couple of questions. I just want to kind of clarify some of these things because I think there are things that we all need to think about, and COVID has definitely, this past year has definitely changed a lot of things. So I think it's interesting. One of the things that Erin, as you were going through your presentation is that I was thinking about is the disability insurance. And a lot of times I feel like that's a missing piece for people because they think of life insurance, but definitely we're far more likely to have a disability that prevents us from working than we are from dying at a young age. So I think I want people to think about that. And also, can you tell us a little bit about, I think disability now is, even after this year, we're going to see so many different claims or different issues because a lot of people who have had COVID are now not recovering, at least not to the extent that they had hoped for. And can you tell us a little bit about that? Is that's the kind of thing that could be covered by disability insurance?
Sure. So it's important to understand with disability insurance what you have. You might have short-term disability insurance, which could cover you from anywhere from the first 14 days after an incident up to 90 or 180 days. And then you might have long-term disability insurance that kicks in after 90 or 180 days and lasts much longer. And with disability insurance, I say the devil is really in the details. So you really have to understand, how do I use this? What does your policy say is the definition of disability? For the vast majority of policies, that's going to be a loss of income of 20% or more. So if you have had COVID and it's keeping you, the symptoms or the after effects are keeping you from being able to work and earn, then you could file a claim. But it's really important to understand that, again, most policies are going to ask for proving that you've had a loss of income first before you can file a claim. There are some policies that have a broader definition, like saying I have a lack of duties or a lack of time I can spend at work, but that's not the norm. So make sure you understand when is it that you can use your policy and file a claim.
Great. And I have a question here that has come up, and this is a question I get a lot, and it's so important. My wife is pregnant. Should she wait to get term life insurance until after the baby is delivered?
That's a great question. I'm so glad you asked that. So the simple answer is no. We have women all the time who come to us 6, 7, 8.5 months pregnant, and it's helpful to get the insurance before for a couple of reasons. The more serious one is that there are issues like gestational diabetes or postpartum depression that can come up later in pregnancy or immediately after that can make it more difficult for women to get insurance at the best rate. So as soon as you know you're pregnant, again, you know you're going to need that coverage, I would start applying then. It's true that women's lab work and whatnot, and of course weight is going to be different when they're pregnant, and as the pregnancy goes on, that's even more true. But the insurance companies understand that and can account for that. So we've had no issues getting women the very best rate, even at 7 and 8 months pregnant. And then the kind of more humorous side of that is what I've seen is once you have a baby, you're not going to want to be reading insurance paperwork and dealing with that. So I usually tell people, do yourself a favor, get this now while you're still sleeping at night. Otherwise, it might take you some time to loop back to it. So it is something you can cross off your list before the baby arrives.
That's great to know. And I would definitely reach out to Erin because a lot of insurance agents will tell you they cannot insure you or will insure at exorbitant rates. So that, as I have heard from clients. So if Erin says, that there's, that's, I think, the benefit of working with a broker and not just kind of looking online, is that she can really navigate which insurance companies would be best for your situation. Okay, another question. When is it time to stop funding term life insurance? I feel like the money would be better invested directly in the 529 plans. Our children have 6 more years of education expenses, so we are getting close to the end of our spend burn years.
It really depends on what your other assets look like. So, let's say you have a baby, but the day the baby is born, you open a 529 plan, you also buy life insurance. You're doing that because God forbid something happens to you. That 529 plan has nowhere near enough in it, and probably other assets aren't as high as you would want them to be to support a baby for the rest of its life. However, if you have a 15-year-old or a 17-year-old and you have the 529 plan funded and you have other assets and you feel that, God forbid something happened, the financial burden would not be as high, you could either reduce your insurance coverage or you could cancel it. There's never a penalty to canceling your term insurance early, but realize that the term insurance should be replaced by other assets, or the need to provide for that dependent should be going away before you get rid of that coverage.
Great, thanks. John, I have a question for you because the cybercrime is such an issue. I think it's hitting so many people. And in particular, I feel like it's hitting older people. And I've even had, my father, thank God, but it was like the skin of his teeth. He didn't end up transferring a whole bunch of money. So I was wondering if if you're older, if there's any change in what the premiums are for cybersecurity, because I might just get it for my parents.
No, it's a good question. So to answer your question, no, there is no change in premium when it comes to your age. There's really not a lot of underwriting at all, to be honest with you. Really the only question as you start requesting higher limits. So maybe to answer quickly, most insurance companies are offering 100,000, maybe 250,000. There's one company that will offer up to $1 million worth of cyber coverage. That said, to offer 250,000, maybe one question's asked right now. And again, this can change over time, right? As this continues to be a bigger problem. But as of today, the only questions really being asked, have you ever had a cyber crime against you? Is really the question. So age, no concern. Again, it's a great question because, it's definitely a concern for the elderly, and we've definitely seen them targeted a little bit more. But that is continuing to spread. So to answer your question, no, not a lot of underwriting. It's really a matter of the way these insurance companies add cyber coverage. There's really no standalone cyber insurance companies out there today. So you can't just buy a cyber insurance policy. What these companies do is they endorse that coverage onto your either homeowner's policy or a renter's policy. So if you're with one of those 6 companies that cater to the affluent community, you can just endorse it right onto your policy. So those companies are Chubb, it's AIG, Cincinnati, Berkeley One, Vault, and Pure would be the 6 big names. So they all offer in some capacity at some level those coverages, but really need to be with one of those companies to be able to take advantage of this cyber coverage.
Okay, great to know.
Okay. Yeah.
Okay, the other thing I just want to reinforce, because it's something that Erin mentioned that I think a lot of us don't think about, are all of those factors that go into the life insurance piece of things and that can affect your premium. So traveling, like especially now that, and I think it's kind of interesting that COVID itself is not it's not a condition that's affecting your premium, but all of these kind of risk factors for more severe COVID, I guess, if you will, are going into that. So even like, I think you had mentioned once when we were talking, you did this presentation at a different point, was that if you have all of these doctor's appointments that you've backed up, that you haven't been going to because you don't want to, go out there and be exposed, having all of those at once could end up affecting your premiums. I thought that was just so interesting, and really goes to the importance of talking to somebody even before you're even thinking about, like, you really need to get insurance. That, like, if you're thinking about it at all, it's good to talk to somebody like you to say, okay, what do I need to do in the next 6 months to a year? So if you're like thinking about getting pregnant or something, then like that's the time to talk to somebody and think of all of the options. So I'm going to be spreading the word about that anybody who's even thinking, especially about getting pregnant, because that's usually when your need for insurance goes up. You really need to get that done beforehand for lots of reasons.
Yeah, it's always good to just have a conversation with a broker. I had one client call and say, I'm thinking of getting genetic testing to see if I could have something like the BRCA gene. And I said, let's do your insurance first, because it's not been recommended. You're just getting tested out of curiosity. So, just in case it shows up positive, let's have your insurance in place. I had another client who said, I went and got BRCA testing. I found out I'm positive and it was recommended that I have an MRI. Can I get an insurance policy now? I said, no, you have to do the MRI because it's been recommended, and they're going to want to see the outcome of that. And if the outcome is good, we can then get you insurance. But because you've already started this process, they're going to want to see closure before they're going to offer you a policy. So, 2 different clients that called me at different stages of that curiosity and testing. And so it's again, always worth having a conversation. And if you're thinking about insurance, you're thinking about scheduling those 10 doctor's appointments you haven't had in a year and a half, let's talk about the insurance first.
Yeah, definitely. Okay, another question, and this is like, I think from somebody who's a professional, because this is a pretty technical question. What are the best rated and most reliable insurance companies, and is it important that they have reinsurance backstopping?
So I will say we only work with companies that are rated in the A's. There are companies that are rated A, AA, AAA, A-, A+. You can go online. It depends on the rating system. In the history of the United States insurance industry, which is over 100 years old, there's never been an insured that was failed to be paid due to the insolvency of the insurance company. So sometimes people get caught up with the ratings. Any of these big companies in the A's are extremely strong, extremely stable. In New York State, we have one of the strictest superintendents of insurance. Insurance companies go through a huge vetting process. They have to put up large reserves to even be able to do business in New York State. So I think you can really split hairs over, is an A or an A+ or an A++ better? I would more look at what is the insurance company offering you. If you have an underwriting issue, a health issue, can they give you the best rate? For the product you want, can you get the terms you want? If you're looking at a specific product, is their performance better than the other company? So I think there's a lot of questions to ask beyond just simply ratings.
Great.
I'll comment on that as well. If Shannon, I don't want to cut you off, but I'll comment on the PNC side. It's a little bit different for us, but definitely, for us, I mentioned the 6 companies that offer the broadest products. And also, if you do experience a claim on your property or a liability claim, the way you're treated, those 6 companies are definitely catering to the affluent clientele. and they built their products for that. When it comes to ratings, again, we only work with A-rated plus insurance carriers, as Erin mentioned on her side. For us, the reinsurance thing is a really big deal. And I mentioned Florida earlier. Reinsurance rates in Florida, for example, for property coverage went up 40 to 50% last year because of those claims, which is putting a lot of that pressure on the state of Florida. So a lot of companies we've actually seen that are not well-backed are going out of business, or they're just not doing business at all in those states because they can't take on the capacity or they can't write any new business. So on the property side, depending on the location, to answer the question, I mean, there's absolutely a difference in terms of the coverage that you're going to get, number one, but also the financial backing. We see a lot of companies that are Florida domiciled only, which means they don't have, really any infrastructure anywhere else, and they don't spread their risk well. So when you do get one bad storm, there can be some financial issues and the way a claim is settled. So to answer the question on the P&C side, definitely better insurance companies than others, and reinsurance is a really big deal on our side, especially depending on the location.
Thanks, John. Thanks for clarifying that.
Sure.
I actually have one other question for you, because I think this is something, it's kind of been coming up more often with Airbnb and things like that. But I think now we have more people have second homes. What would be your recommendation in terms of a lot of people, when you have a second home, people are renting it out?
Yep.
Right. So whether, through a rental agency or just through Airbnb, what implications does that have on your homeowner's insurance? Because I think that's something maybe a lot of people don't think about.
That's a great question. So depends on how you're renting. So if you're buying a second home, or you own a second home, or you're just deciding to rent the property out and you're renting it to a full-time annual tenant, maybe we need to adjust the policy slightly. But again, the risk is really not all that significant, and relatively easy change. But again, inform your broker because the exposure has changed. Airbnb is a whole other story. Mm-hmm. Insurance companies despise Airbnb short-term rentals. They run for the hills. That said, in most products, not all, and I would say in most products, insurance companies are now starting to write in possible exclusions of coverage for that type of an exposure when it's done consistently. Not everybody's doing it, and some of their contracts are too broad to do it. But if they find out, through a claim or something occurs, you're putting yourself in a really tough situation going forward from an insurability standpoint. That said, what you need to do if you're going to decide to do, I have plenty of clients that have homes at the Airbnb 50 weeks out of the year. And what you need to do is you need to go to a company that fully understands that and has built their policy around that type of exposure. So absolutely have that conversation. You're probably going to need a new type of policy if you're doing it. Doesn't mean you can't get insurance. However, just as a note, it is more expensive to do that. But it's better to be proactive, have those conversations ahead of time. God forbid a claim happens, you don't want to put yourself in that position.
Yeah, it could be a lot more expensive.
Absolutely, much more expensive.
Address it in the front end of things. Well, thank you so much, Erin and John. I think this has been really enlightening, and I will encourage everyone to reach out to Erin or John if you have additional questions that they can be helpful with, and you will also get a replay of this recording, and we'll have everybody's contact information as well. So please, if you have additional questions, please reach out. So thank you very much, and
thanks for having us.
Yeah, and maybe we'll do this again.
Sounds great.
Okay, and stay tuned as well, because I do regular webinars, sort of with different experts, and so please reach out if you want to be on our mailing list for those.
Have a great day.
Okay, take care, everyone.
Bye.